Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD remains on the back foot as the support from the more hawkish repricing and interest rates expectations got exhausted. The market is now in line with the Fed's baseline projection of two cuts in 2025, and we will likely need strong US data to price out the remaining rate cuts and give the greenback a boost. The recent weakness in the US dollar got triggered by the weaker than expected US jobless claims figures on Thursday, although that might have been an overreaction considering that the data was still below the cycle high at 260K, and continuing claims could get positively revised this week. On the JPY side, the currency weakened across the board recently after we got the news that Japan was considering trimming the issuance of super long bonds. That was enough to calm the markets in the short term and weigh on the yen. On the monetary policy side, the market is still unsure on another rate hike, given that it's pricing just 18 bps of tightening by year end. Nonetheless, that's been creeping up in the last few weeks, supported also by higher than expected Japanese inflation data. The US Japan trade deal and the evolution of inflation will be key for the BOJ. Now, the daily chart. We can see that USD/JPY rejected the 146 handle here, and it's now on its way toward the 142.35 support zone. If the price gets there, we can expect the buyers to step in with a defined risk below the support to position for a rally into the 148 handle. The sellers, on the other hand, will want to see the price breaking lower to increase the bearish bets into the 140 handle next. On the 4-hour chart, we can see more clearly the recent price action with the US dollar sell-off helped by the weaker than expected US jobless claims data on Thursday. There's not much else we can glean from this time frame, so we need to zoom in to see some more details. On the 1-hour chart, we can see that we have this minor downward trend line defining the current bearish momentum. The sellers will likely continue to lean on this trend line to keep pushing into new lows, while the buyers will look for a break higher to start targeting the 148 handle next. These red lines define the average daily range for today. For the upcoming catalysts, today we have the US ISM manufacturing PMI. Tomorrow we get the US job openings data. On Wednesday we have the US ADP and the US ISM services PMI. On Thursday we get the Japanese wage data and the latest US jobless claims figures. And on Friday we conclude the week with the US NFP report.